All right. Hello, you're welcome to Easy Forex. And today I want to show you something very important that will help you in your trading journey. So straight into the video. All right. So today I want us to look at entry confirmations. All right. So whatever strategy that you are trading, you know that after your analysis, the next most important thing is to wait for price to come back to the area where you would want to enter the market. So today we are going to use a bearish scenario, and you can invert whatever that I teach, and you'll get the bullish scenario. All right, so let's just say on your higher time frame, which is very dependent on which type of trader you are and what strategy you are using. If you are a day trader, maybe you are starting from your H4, all right, or your daily time frame, or some people use the if you are a scalper, people use the H1, M15, and then 5-minute entry confirmation. But in this scenario, let's just say you are using your H4, all right? So in a bearish scenario, you see that price will be trading to the downside, all right? You see this price action. Price will just keep trading to the downside, breaking lows, all right? So after price has broken the low, if you are using a break and retest strategy, this was our recent low that has been broken and price traded down, right, on your H4 time frame. So let's just say this is your H4 time frame. H4 time frame. Now, after price breaks the low, what is one of the rules concerning your break and retest trade? It means it says when support is broken and price returns to that area can act as a resistance. So let's just say this was the area where price broke out of. This was the support that was broken. So let me indicate that with broken support. All right. So this is your current price action, and you are within this range, okay? And this range. So when price starts pulling back, on your higher time frame, what you see on your lower time frame is that price is giving you that series of higher high and higher low towards your broken support, which in this case I'll call a POI, point of interest. That is where you are waiting to take a sell entry, all right? So on a higher time frame, you will see that it can be just one candle that broke out of the zone, and then one candle coming back to retest the area, all right? So in this scenario, this will be your H4 break of structure. This candle broke the low here, and then this candle came back for the retest. So on the lower time frame, this is the structure you will be seeing, all right? You'll be seeing that upward channel towards your point of interest. Now, when price gets into the zone, on H4, you don't just hit a sell button because you want to sell. All right. What you do is that you go to a lower time frame like 15 minutes, 1 hour, 5 minutes, 1 minute, or 2 minutes. But in this case, let's just use the 15-minute time frame. All right. Or perhaps the 5 minutes. Let's just use the 5 minutes for our confirmation entry. We'll be using the 5 minutes. So price have retraced into the area. You don't just hit the sell button here. You don't just hit it. You wait on the 5-minute time frame to see a market structure shift. All right. Market structure shifts. I just want this video to be short. A market structure shift. And what is a market structure shift? In this scenario, you see that in an uptrend, you have been taught as a break and retest trader that in an uptrend, price will keep giving you series of higher highs and higher lows, where price keeps breaking the highs, all right, and establishing new highs. So in this retracement phase, pay attention to this side. We saw that this was a high and this was a low, and this was another low. All right, this was our previous low. Price moved higher. It retraced a bit. It failed to go below this low, and then it went ahead and broke the structure. It retested the structure, went ahead and broke the structure. It retested the structure, and then straight into your point of interest or the area where you are waiting to sell. Now, as price was moving up, what was the last low that price put in before reaching your point of interest? And this was the last low. So as price hits this on the lower time frame, your point of interest on a lower time frame, you want to switch to a lower time frame. In our case, we said we'll be using the 5 minutes. So you go to the 5 minutes and look at the last low before price touched into your zone and wait for market to sweep that low. So you want to wait for price to break that low. So when this happens, we say you have a market structure shift. All right. So as soon as that happens, that is just one phase of it. Now, after the market structure shift, you wait for a retracement. A retracement. After the market structure shifts, you wait for a retracement into what? Into the low that has been broken. We are using the break and retest strategy as our example here. So this was the low that was broken. This was the low that was broken. So you wait for price to come back into that, and then you can hit your sell right here, put your stop loss right above the structure because you're on the 5 minute time frame. By this time, your risk to reward may have been reduced drastically for you. All right. So this is one way of managing your trade and making sure that you get a good risk to reward so that you don't blow your account. So as price retraces back into your area, you can still take your entry because you're on the 5 minutes, put your stop loss right above the structure, and then you go for the immediate low as a target, as your TP1. And if you have other entries, you can hold on and then target a higher time frame zone. All right, so you can switch back to your H4 and look at the low that was formed before price went for the retracement, and then you can use that as a target. So you'll be looking at targeting very soon. But today, I just wanted to show you what do we call it? Entry confirmation. All right, entry confirmation. So as a recap, we said that this is a bearish scenario. So this is an H4 market structure where we have price give you this low, we had this high, price swept the high, and then immediately swept the low. So we switch bearish again. Price retraced a bit into this low, pulled back a bit, retraced, and then went ahead, broke this low. All right. Right after we break this low, we had price give us that deep retracement, taking liquidity here, and then trading down, breaking the low here. So this time around, you know that we are still bearish. So once this low has been broken, we are waiting. This is support that has been broken. So you are waiting for it to be retested as resistance. And we are saying that when price is retesting on H4, it will just be one candle that is coming up. It may be 2 candles, 3 candles, depending on how far price went after it broke out of the support area. All right. So sometimes just one candle can break and another candle can come back for the retest. So this normally happens on a daily time frame as well, or weekly time frame as well. So when price comes back on your lower time frame, we say that you will be seeing series of what? Lower highs and higher highs, which will give you that bullish retracement structure. So once price touches your zone, in order to validate that zone, you need to wait for price to break the last low price put in before touching the zone. So you wait for a candlestick to break below it. It should be a convincing break. All right. It should be a convincing break. The body should close below here, or sometimes a wick can close below. The next candle can open and then the body will close below it. It's still a market structure shift. So you wait for price to retrace right back into the zone, and then you take your sell entry in this regard, and you put your stop loss right above the structure. You put your stop loss right above the structure. All right. So in this case, let me use our tool. We wait for price to break this low and then give us a retracement. So this was our last low. This was, let me use LL for our last low, not a lower low, right? Last low, or that is fair enough. Let me use that. So after price breaks out of this low, you just wait for a retracement into that area, and then you can take your shot. This is where you can use your Fibonacci. That is if you know how to use it, or your premium and discount too, which I'm going to show you sometime soon to come. There are other videos you can watch concerning premium and discount. That is an ICT strategy or SMC strategy. And you can deploy it in your break and retest strategy as well. It's very helpful. It helps you to avoid certain losses. All right. So this is our entry confirmation technique that I have for you today. And if you are bullish, it's much the same way. I thought I was going to do just the bearish scenario, but let me try the bullish scenario. So let's say this is your H4 bullish structure. All right. So this is your H4 bullish structure. Okay. So we had this low being broken, and then we had the market structure shift right here. So you look for a demand zone right within this area for your entry. And let's say price just gave you that. This was just liquidity. All right. Price swept that liquidity, tapped into the demand zone. Once price taps into the demand zone here at this point, that is when you switch to your lower time frame. As soon as price touches the zone here, you go to a lower time frame. So this is H4. You can go to any time frame that is lower than H4 for entry confirmation. And I prefer you use either the 5 minutes, 15 minutes, or the 30 minutes or 1 hour. All right. I normally use the 15 minutes. Sometimes I use the 5 minutes. So let's just use the 5 minutes, for example. So when you go to the 5-minute time frame, you see that within this leg that came down, it was a bearish structure. You will see a series of lower lows. All right. Price will keep breaking the lows until it touches the zone. Once price touches the zone, I said, look for the last swing high, all right, before price tapped into the zone, and wait for price to break it to the upside because you are bullish. Once price breaks it to the upside, wait for a retracement back into the range. That is where you can hit your buy. That is when you can hit your buy and put your stop loss right below the range. Wow. I may have to change this. Buy. Your stop loss here, and then your target right this way. Okay, so what you are waiting for is for this bearish structure that is coming into your zone to break the last high, swing high. It put in before touching the zone, and then you wait for a retracement back into the range or to the high of the range, which is your resistance that has been broken. Then you take your buy at that zone. That is what I want to mean. So maybe let's just see if we can have an example on our charts. That is the most important thing. Let's just see if we can. So let me go to H4. This is VIX25 volatility index. Let's just see where we had a perfect example. All right, so this is H4, all right? And we can see that we are considering this zone, this price action here. Let's just say that you open your chart today and this is what you are seeing for the day, all right? So as you are seeing this for the day, what do you want to consider? The market structure, current market structure, which is bullish. We had this high, price pullback, a high, a pullback, a high, a pullback, and then another high in this fashion. So once price put in that high, we can see that this was the last low that price put in before breaking the high here. All right. So we had this high, this low, this high, this low. And then we had price go above the previous high and close with the wick. This is what we call liquidity sweep, but we'll look at that later. And then price came and broke this low with this move. So what we are saying is that once this support has been broken, this was support. Once support has been broken, you are waiting for a retest into the zone. All right. So this was the retest. And when you go to the lower time frame, you can see that the retest will be a kind of series of lower lows and lower highs. Lower lows and lower highs. So let's just go into 15-minute time frame to look at this range. And then you'll be considering just this bullish move that came for that retracement into this area, which I want to mark blue. All right. So we want to consider the price action here. So we go to 15-minute time frame. So on our 15-minute time frame, where is it? Okay, so on our 15-minute time frame, let me remove this. On our 15-minute time frame, this was where we saw price break above this high. This was the high, this was the low, and then this move broke above this high. So this was the last low, all right? But on H4, we saw this as a wick. The break was a wick. So this is just a fake out. Don't worry about that. And then we had price come to break the low and traded lower below this support area. And what we are saying is that we are waiting for a retest to this zone. And this was where the retest began. It began from here to the upside. And let's look at the price action that happened at that side. At that side, let me clean this. At this side, as we are going for the retest, what do we see? We see a low, a high, a sweep of the low, and then a higher high, or let's just say a break of the low right after price just broke up, breaking this structure. So this was our market structure shift, bullish market structure shifts. Don't get it twisted, okay? So, come on, don't get it twisted. Good. So this was our market structure shift. This was when the retest began. All right. So after we broke out of this high, price came to retest that high and then bought beautifully right into our zone. So this is the support that we were waiting for price to retest. And it was a deep one, a deep retest. All right. So as price was moving up, what we could see here in this scenario was that price was giving us just some kind of a straight move. What I mean by a straight move is the price action was strongly bullish. We saw some little bullish, bearish price actions, but they were not strong enough. But as soon as price printed this low and went right straight into our support zone, we saw price retrace down, all right, and it broke this low. But in our case, because you don't understand market structure, I don't want to really confuse you with ICT concepts. So let's just say that this was the low that was broken. Let me just use this low. Red. This was the low that was broken. So once price broke out of that low, we said that this leg becomes where we are looking for the pullback. And we just had a little pullback, all right? The pullback was just this move. This move. And price sold. Price sold from there. So this was your confirmation entry for the sell. But you know that price didn't create any support line right here for us. So we could have missed this entry, but look at it. We had another bullish move that tried to approach to the blue line again. And then right after, look at what happened here. This was a confirmation entry. This was the last low. Because we are bearish, we are just looking for sell entries, all right? This was a low, a high, lower high. Let's just say higher high, lower high, higher high, lower high, higher high. And we had a lower low here. And what did price do? Price just broke the low. And when it broke it, look at the immediate retest. Price came for that retest. And after it's left a week and then sold beautifully. So what I was saying is that this was your confirmation. You can put your sell here, a stop loss above the structure, can go for this target. Can go for this target. And you had it beautifully. It was just a beautiful trade. So beautiful. So beautiful. All right. So beautiful. So beautiful. Without stress. You were just tapped in with little drawdown and you hit your take profit. 1:3.8. 3.8. That was a good entry. So look at the same thing happening here. Look at the same thing happening here. Because we are bearish on the higher time frame, any bullish move is just a fake move. You consider it a fake move. And once price prints a last high, you are seeing high, a low, a high, higher low, higher high, higher low, higher high, higher low. Let's just say higher high, higher low, higher high, higher low, higher high. And price gave us this market structure shift here. Forget about the wick. Let's look at the bodies of the candles. All right. So price just traded below this zone. The support here, it broke out of that. Once it broke out of that, this was the leg that broke it. So we say we are waiting for a retracement. Once price retraces, how you confirm that is with candlestick confirmation. All right. And we saw that price gave us rejection candles at that zone, where we saw the wicks of the candles trading to the upside. I mean, we saw the rejections here. So this was a supply zone. If you know about supply zones, the last green candle before the break becomes our supply zone. And you could have taken your entry right there. Your stop loss right above the zone. You go for the immediate low and look at it. You hit your take profit. This was the low that was very obvious. And if you took this trade, you made money. If you took this trade without stress, and this also gave you 1:5. So you have 1:3.8, 1:5. And look at how price sold from there. Very beautiful sell. It even continued to sell. All right. So this is what I'm saying about confirmation entries. And thank you so much for your time. If you wish to really subscribe to my channel, I'll be much grateful. And I'll be doing more of such videos for education purposes. So if you want to be receiving such, make sure that you subscribe to my channel, hit the notification button so that when I drop a new video, you have access to it. So we meet again. It's easy for us. See you soon. Bye-bye.